All right. Good morning, everybody. Good morning, all you magnificent melon heads. Happy Monday, everybody. Today is February 3rd, 2025. You guys may notice my throat is a little under the weather this morning. You can probably hear it in my voice. I'm feeling rather doo-doo, but we have got to do this show this morning because, well, the trade war has arrived. The Orange Swan event is here. President Trump has followed through on his threat to implement tariffs on Mexico, Canada, and China. And the market right now is freaking out. So let's talk a little bit about what he actually did. Tariffs of 25% on goods coming in from Canada and Mexico, along with 10% tariffs on oil coming in from Canada. He also levied an additional 10% of tariffs on goods coming in from China. That is, of course, on top of the pre-existing 15% that he had already implemented during his first term and that President Biden left in place through his term. So all of these tariffs will go into effect at 12:01 a.m. tonight on February 4th. And, well, markets are kind of freaking out right now. We've got the dollar is surging and risk assets are selling off. The Dixie is up over 109. It went as high as 109.8 overnight. And, of course, that stronger dollar is wreaking havoc on stocks. We got risk assets selling off, tech stocks. We had the NASDAQ futures were down as much as 600 points last night. Now they're down 300 and change. We got a little bit of dip buying going on here. Crypto is also selling off big time. Bitcoin was down about 10% over the weekend. The meme coins are getting absolutely crushed here. Again, risk assets, you don't get much riskier than meme coins. And so, of course, they are getting clobbered on this news. Now, we do have some beneficiaries, in particular, the long end of the yield curve. We've got people are moving to safety because of this uncertainty that's going on surrounding these tariffs. 10-year, 20-year, 30-year treasuries, we're seeing those yields move lower as people bid up the price of those bonds, moving out on the yield curve for safety. That's causing a little bit of a flattening of the yield curve this morning. And even gold is up slightly on this news. Gold is about $10 higher this morning, a new all-time high. It's a little unusual to see gold doing so well. Gold is a safe haven asset. But when you've got such a ripping move in the dollar, typically that's very bad for gold. But again, investors are moving for safety right now. They don't like uncertainty. And these tariffs are just about as uncertain as you get. Now, the question is, what happens next? The Canadians are planning to retaliate. They're talking about putting some retaliatory tariffs on things like wine and spirits and beer coming in from the U.S. The Mexicans are talking about their Plan B tariffs, whatever that means. Haven't heard from the Chinese yet. Also, Trump is talking about possibly putting 100% tariffs on semiconductors. Man, I tell you that the AI mania just cannot catch a break here. 100% tariffs on semiconductors. On top of everything that's going on right now in tech with DeepSeek and with the AI mania kind of wobbling here, that would be just catastrophic for the hyperscalers. Now, those 100% tariffs on semiconductors aren't supposed to go into effect until February 18th, but that's one to keep an eye on. Also, we've got Nvidia closed on Friday below their 200-day moving average. That's only the second time since 2023 that's happened. It closed below the 200-day moving average on Monday last week, bounced above that, held it for most of the week, and then closed below that on Friday. Now Nvidia is selling off again on this risk-off move going on in markets here. So we've got a big breakdown in the stock that has led this charge higher for so many years. And on top of that, you've got the risk of tariffs. And if I might toot my own horn a little bit here, guys, I put out a video last night about the worst kept secret in Wall Street, that Nvidia and Supermicro and companies like them have been inflating their revenues with illegal sales to Chinese front companies hiding in plain sight in companies like Singapore and Malaysia. You probably want to check that one out. I got a link down below in the description. We're going to go pretty fast and pretty short today, guys, because I am feeling pretty lousy and I want to get through this before we start coughing. So why don't we shrink my big melon of a head and let's see what is going on in these markets. Don't forget that like button and that subscribe button for the algorithm if you're new here, because we do this one every day, and normally I don't sound like a frog. The S&P 500 is down 100 points, 1.66% lower. This is a pretty big sell-off going on in stocks here. The Dow is down 638 points, or 1.44% lower. And the NASDAQ is leading the way lower here, down 388 points or 1.8% in the red. Again, the NASDAQ was down as much as 600 points at one point last night before the dip buyers came in. Meanwhile, we've got a sharply stronger dollar here, 109.28 for the DXY. That's up about 91 basis points. We were as high as 109.88 last night. So the Dixie is ripping here despite giving back some of those gains over the last few hours. And then looking over at the yield curve, we mentioned that people are moving out on the long end of the yield curve for safety. You can see that here with yields lower on the long end and higher on the short end. Remember, guys, bond prices and yields are inversely correlated. So we got the 30-year Treasury is at 4.748. That's down about 6.5 points. The 10-year, 4.512. That's down 5.5. The 2-year is at 4.241. That's up a fraction of a point. And the 1 month is at 4.333, essentially unchanged. All right, moving on here, looking over at the commodities board, we've got gold and silver are doing all right here despite that sharply higher dollar. Check out spot gold, $2,811. That's up another $11 here or 0.39%, another all-time high for gold this morning. Silver's getting in on the action as well, albeit to a lesser extent. Spot silver, $31.39. That's up about 9 cents here or 0.3% higher. We've got copper is essentially unchanged. Platinum is down 3.5%. Palladium down 2.3%. And WTI here getting a big surge from tariffs. That one kind of caught me off guard here. We're up by almost 3%, $2.17 higher for March WTI futures at 74.70. It seems with the tariff talk, there's a little bit of worry about global supply, possibly maybe some supply disruption coming from these tariffs. So prices are moving higher. I don't expect that move in oil will last. Also, the OPEC meeting wrapped up today. There was no change to their production policy as expected. Not sure that's having any impact on price either. Now, looking over at Bitcoin, it was a rough weekend for Bitcoin. You can see here, we traded as low this morning as 91,178. Now, guys, on Thursday, we were as high as 106,000. So we sold off a little more than 10 grand over the weekend. Now, we are getting a little bit of dip buying, much like we're seeing in the NASDAQ here. They bid us back up from about 91,000 up to 94,400 as currently priced on Coinbase. And shout out to my friends over at Macro Edge who posted this one. Look at what's going on with the altcoins this morning. Altcoin markets enter free fall as $1.5 billion is liquidated from the crypto market. XRP down 30%. Ethereum off by 20%. Solana 15% lower. Doge 27%, and Trump coin. I don't really understand the draw of Trump coin, but Trump coin down by 25%. Guys, total liquidations in the crypto market have been $2.3 billion liquidated. That's resulted in a loss of market cap of $800 billion. That is the biggest liquidation ever in crypto markets. It's even bigger than the wiped out market cap from the FTX debacle. So crypto's having just about its worst day ever here. And to be honest with you, despite the worst day ever, the fact that Bitcoin is still trading over $94,000 is actually pretty amazing to me, to be honest with you. Now, let's talk a little bit about some of these tariffs here. This one in Barron's this morning, Canada and Mexico hit back against Trump tariffs and market braces for impact as trade war kicks off. The Canadians and the Mexicans are threatening retaliation here. Canadian Prime Minister Justin Trudeau said Canada would respond with $155 billion of tariffs on U.S. goods, starting with $30 billion as of Tuesday. Categories include beer, wine and spirits, household appliances, lumber, and plastics. Again, one word for you, plastics. We're not looking to escalate, but we'll stand up for Canada, Trudeau said at the press conference. We didn't ask for this, but we will not back down, he added, and said he wants to work with the Trump administration. Meanwhile, Mexican President Claudia Sheinbaum said Saturday that she had ordered Plan B tariffs and non-tariff measures in defense of Mexico's interests, according to a post on X. Mexico does not want confrontation, she said, adding she wants to work with the U.S. to address drug trafficking and other issues. Now, here's the thing, guys. Trade wars, tariffs, they are destructive any way you look at it, right? This is economic wars of attrition. It's like trench warfare. No matter what happens, no matter who declares victory, the average person gets hurt. But the United States does appear to have an advantage here. This is in Kobayashi letter this morning. By the way, Kobayashi letter since the tariff began has been excellent. He's come up with some really good stuff over the last few days. The trade war has officially begun. Here's our take on it. New tariffs of 25% on Mexico and Canada and 10% on China are now live. We must first put this into perspective. Mexico and Canada's exports to the U.S. account for approximately 78% and 77% of their total annual exports, respectively. Meanwhile, U.S. exports to Mexico and Canada account for approximately 16 and 17% of total annual exports. So right away, you can see here, this is going to have a much bigger impact on the GDP of Canada and Mexico than it will on the U.S. It's not going to be good for anybody. It's definitely not going to help the U.S. It's going to be very inflationary. Goods are going to get more expensive, but it's going to hurt Mexico and Canada a lot more than it hurts us. The U.S. exports to Mexico and Canada are about $320 billion and $360 billion, respectively, which is less than 2.5% of U.S. GDP. On the other hand, these exports represent 20 to 30% of Canada and Mexico's GDP. The trade war is clearly lopsided. This is going to throw Canada and Mexico almost instantly into recession, is what this is going to do. Again, the U.S. is not going to come out of this unscathed. We're still suffering from inflation from the last round. This is going to be inflationary. We're going to see consumer prices move higher, but it's going to be an instant recession for Canada and Mexico. The real wild card here is China. How will they respond to the additional 10% tariff? We expect higher prices for consumers soon. And then they go on to mention the situation with DeepSeek. This comes at a pretty bad time for tech stocks and for the U.S. AI market. Now, Kobayashi also had this one out here talking about the trade war is live. New tariffs from President Trump are set to impact $1.3 trillion worth of U.S. trade. The U.S. stock market has lost over $1.5 trillion of market cap, with about 43% of U.S. imports soon subject to tariffs. He's talking about the loss of market cap that happened off of the DeepSeek story last week. What does this mean? Now, he's throwing up this image here that's showing the U.S. weighted average tariffs on total imports. And he's saying we're right here, and starting at midnight tonight, we are coming up here, which will be the highest tariffs going back more than 100 years. Here's the Smoot-Hawley Tariff Act of 1930. Interesting fact that my man Mish picked up on yesterday. The Smoot-Hawley Tariff Act was the subject that Ben Stein was teaching in Ferris Bueller's Day Off in that famous boring scene when he said, anyone, anyone, anyone. And here I am trying to make a living entertaining people off of tariffs, reproducing the most boring classroom event ever. Also, we've got President Trump announced the 25% tariffs on Canada and Mexico. They build on already existing tariffs in China. Talking about some of the areas that are specifically going to be affected. At a high level, these tariffs will function like a tax on goods coming into the U.S. Simply put, $100 of goods coming into the U.S. from Canada and Mexico will now cost $125. The U.S. imported $910 billion from Canada and Mexico in 2023. Many of these goods will cost 25% more to import. Let's see, roughly 40% of all imports come from China, Canada, and Mexico. Certain items will be more heavily impacted. Auto industry imports from Canada and Mexico total about $80 billion a year. $97 billion of crude oil comes from Canada each year. Now, that crude oil is going to have a 10% tariff, not 25, and $55 billion of phones coming in from China. So the iPhone might be getting a little bit more expensive. Pay attention, Apple shareholders. A 25% tariff on Canada and Mexico raises costs for U.S. automakers. This tariff is set to add up to $3,000 to the price of some of the 16 million cars sold in the U.S. each year. Food costs are set to rise as well, with Mexico supplying over 60% of fresh produce to the USA. Guys, go buy your avocados before midnight. That's all I can tell you if you're into the avocado thing. All right, let's talk about this one. The market darling, shall we? Nvidia. This is important, guys. This red line you're looking at here, that is Nvidia's 200-day moving average. And if we zoom in a little bit on that, you can see we broke down below that on Monday with the initial panic in the DeepSeek sell-off. Then the dip buyers came in and they bought Nvidia back up on Tuesday last week. And then we slowly gave back those gains, and we closed below the 200-day moving average on Friday at about $120. Now we're down about another $4 pre-market this morning. So we're going to be opening up somewhere down here this morning And just to show you how important this is a major breakdown in Nvidia. If you go all the way back, we have not traded below the 200-day moving average since the beginning of January in 2023. Virtually the entirety of this AI mania, Nvidia has traded well above its 200-day moving average. So to call this a major technical breakdown here would be an understatement. It looks like it's going to open up even lower. And with some of these tariff threats, well, let's just say Nvidia's got some big problems on the horizon here. First and foremost, this one, guys, again, I'm going to toot my own horn here. I put out this video last night about the China export scandal, the worst kept secret on Wall Street. Nvidia and Supermicro illegally selling chips and servers into Chinese markets using subsidiaries in Singapore. Anybody who bothers to look can see what's going on. You will be amazed at how many of these chips have made it into China. It's gotten so ridiculous that the Chinese market is now oversaturated with these chips, and they're dumping them on places like eBay, Alibaba, and even Facebook Marketplace. So I put a link to that video down in the description below for you guys who are watching on YouTube. And if you're watching on Twitter, you can also check that one out. It's pinned to my profile on X. And there is more bad news coming for Nvidia. This one from Autism Capital on X. Donald Trump said, I had a good meeting with Jensen Huang, the CEO of Nvidia. We're eventually going to put tariffs on chips, on oil and gas on the 18th of February, and also tariffs on steel, aluminum, and ultimately copper. Now, obviously, that is a big deal here. Tariffs on chips. That's one that hasn't been talked about a lot this weekend. They're not going into effect at midnight, not until February 18th. So that would include chips coming in from Taiwan here. And how big? Well, this is in data center dynamics. Trump plans 100% tariff on foreign semiconductors to incentivize U.S. manufacturing. So whereas President Biden was using the carrot of the CHIPS Act, giving funding to companies to try to come and build foundries, the Donald is going right to the stick here, saying, I'm going to tariff your chips if you don't build them here in the U.S. Now, guys, these higher prices are going to go into effect right away. And things like chip foundries, they take years, even decades to build. So the higher prices will get here first. And with companies like Nvidia already struggling with the fallout from this DeepSeek story, 100% tariff on chips coming in for data centers. I mean, this is just catastrophic for the hyperscalers and the AI bubble. So keep an eye on that one. And I just want to say thank you so much to my man, Mish. Thank you very much, Mish, for supporting the channel with those 10 Nobody Special Finance memberships. Guys, if you receive one of those memberships, be sure and let Mish know your gratitude. Thank you so much, Mish, for supporting the channel. And we've got Eduardo Garcia. What's going on, Eduardo? He says, one gold message saying silver fell below 27 overnight. That's kind of interesting. I did not see that fall in silver. Let's bring the silver chart right back up here. Not the chart, the commodities board. Let's make sure of that, because I am showing spot silver at $31.31. So one gold, keep in mind, one gold trades in those the crypto gold and silver certificates, right? So it's possible with the sell-off in crypto, one gold was selling well below because people were worried about liquidity. People were worried about cashing out. And so they sold down those crypto tokens that are supposedly backed by gold and silver. Those may have gone as low as 27, but spot silver didn't get anywhere near that last night. Thank you very much, Eduardo Garcia. That would be one gold losing its peg to silver, if you will. Joey Sock says, Jack, try a hot toddy, grandmother's advice. Well, I got my first cup of wake-up juice in me, and now I got, this is Gigi's throat comfort tea with honey and lemon in it. And, well, it's just enough to get me through this stream, but, yeah, you can hear it. It's pretty rough. My girls brought it home from school. Everybody's been sick for the last week, and now it's my turn. Thank you, Joey Sox. Appreciate the super chat, and I will try a hot toddy, courtesy of Grandma. And Eduardo is back. He says, shows below 27 on one gold's chart at 2:40 a.m. Sorry about that. Again, Todd, I think what you're seeing there, I think that's one of these one gold silver tokens losing its peg to the underlying metal. I think people were worried about one gold being able to meet withdrawals. And so they started selling their, let's call them silver certificates. You know, one gold uses I believe it's like a digital crypto that represents gold and silver in their vaults, and you can redeem them. But I believe the price was moving lower because it was depegging. Don't quote me on that one, but I can tell you spot silver got nowhere near it. I don't have a one gold chart handy. It'll take me a few minutes to dig that one up. But I don't think the underlying metal got anywhere near that last night. There was a little bit of move lower in gold and silver last night for a little while, but it's up this morning. Thank you very much, Eduardo, for supporting the channel. Thank you, everybody, for putting up with my coarse throat this morning. I appreciate that very much. Shout out to everybody for the super chats and supporting the channel, as well as my Patreon supporters on YouTube and Patreon. Thank you guys for everything you do for the channel. Links down below should you feel so inclined. Don't forget to check out that China export scandal video. You're not going to want to miss that one. Hi, Mom. Hi, Dad. I love you guys. And T.A. Chapman, right in the middle of the sign-off, you sneaky devil. He says, WTF is the sinus cold cough. It is death, Jack. Feel better, man. I've had it since Wednesday. Yeah, it's the season, man. We've had like 2 weeks of miserable cold. We're not getting off that easy. So happens once a year. We must press on, though. Thank you, T.A. Chapman. And everybody, till next time, live small and dream big.